up, guys? It's Ray here, back with another video. Today's financial analysis video is going to be another German company, of course, another energy German company, and it's going to be E.ON. So let's start with the chart. I've invested £1. It's gone up by 5% in a very short period of time, which is of course good news. But we have to check the reason why it's gone up. So let's check the max performance. So over its lifetime as a listed company, it's appreciated by 34.62%. So it's an energy-based company, as you can tell by the name. It's got 73,000 employees, which is a pretty decent amount of employees. So it's suggesting it's probably going to be a very large company. 27.51 billion as a market cap. The PE ratio is 10.41, which is amazing. Revenue 60 billion, which is more than its market cap, which is a bit of a number that you want to question. Let's see its profit margin. Its earnings per share is $1 and its share price is $10, so it's about 10% per year, which is decent. It takes about 10 years for you to earn all your money back. Dividend yield is almost 5%, which is really good. Let's check the profit margin. Usually when the dividend yield is high, around 5% or more, the profit margins aren't going to be so high because they usually give out most of their profit or a large chunk of their profit to shareholders. The profit margin's 1.67%, which isn't very good. It's not worth investing in, especially if the dividend yield isn't a lot higher than that. It would be a good investment if the dividend yield was a little bit higher and the debt to asset ratio wasn't so high, because the debt to asset ratio is a killer when it comes to market performance. Because yes, a company can make a lot of earnings, but if it's got a lot of debt, all of the earnings they make most of the earnings, a large chunk of the earnings have to be paid back in interest to their debtors. No, sorry, to the people they owe the money to. Let's check the cash flow statement. So they've made about 1 or 2 billion in net change in cash for that year, for the year of financial year of 2020. They haven't got a financial cash flow statement for the financial year of 2021, which isn't very good. It shows they're not very consistent with their financial statements. Their accountants probably aren't very good. Yeah, net change in cash of 765 billion, which is really good. Let's check the previous years. Minus 2.2 billion and 1.616 billion. So overall, I would say a net change in cash of 0, because you have to kind of see it as a story. If 1 year a company's done very good net change in cash, the next year's done really bad, and then the year following is done really good. You have to it's good to aggregate the amount that the company has accumulated in terms of cash, and then average it out that way. But it's also good to see that company is increasing its net change in cash, unless there's a reason why they've not made a positive net change in cash. And usually it's because they've invested the money somewhere else, which, if they're a good investor, or if the company knows how to invest capital properly, then it's a good thing. So it's not necessarily a bad thing. So that is E.ON. I hope you guys have enjoyed the video. I'll see you in the next one.